In this video, we will be computing or preparing the income statement using the absorption and the variable costing, considering the information that we had in our previous video. So, the problem that we have has the following information. So, for the month of January of 2021, the selling price again is 20 per unit. The units produced is 30,000. The units sold is 20,000. The beginning inventory is 0. In terms of variable unit cost, we have manufacturing of 9, which includes 5 for direct materials, 3 for direct labor, and 1 peso for factory overhead. The variable selling and administrative expenses is 2 pesos per unit. In terms of fixed cost, manufacturing overhead is 120,000 and the selling and administrative expenses is 15,000. Last video, we also identified that the manufacturing cost per unit under the absorption costing is 13 pesos and under the variable costing is 9 pesos. So we will now prepare an income statement under the absorption costing. So again, absorption costing is the one that is generally accepted. It is used for external reporting, and so in terms of computation of the income statement, it is the one that we are used in doing. So of course, we have our heading, so the company's name, the income statement, and for the month ended January 31, 2021. No? So, but I'll start it with the computation, which is the sales. So, of course, the sales is being computed. 20,000 units yung nabenta. The selling price is 20 pesos. So, our sales is 400,000. For the cost of goods sold, we'd start it with the inventory, the beginning inventory, that is January 1, 2021. Of course, based on the problem, wala naman pong value yun. The cost of goods manufactured, which is computed, 30,000 units ang na-produce. Under the absorption costing, the manufacturing cost per unit is 13 pesos. Therefore, our cost of goods manufactured is 390,000. Adding the two, we have our cost of goods available for sale. A total of 390,000. And of course, the inventory at the end of January, since 30,000 units ang na-produce, 20,000 ang nabenta, so meron kang 10,000 na natira. 10,000 is the ending inventory of your ending inventory as of January 31. You multiplied it by 13 pesos unit cost. It will give you a 130,000 value. So, ibabawas natin yun. Right? So, you have a total here of 260,000. Okay? That's the 260,000. And that is your cost of goods sold, representing the 20,000 units sold multiplied by the unit cost of 13 pesos. So that's 260,000. Okay? And then of course you will deduct the 260,000 from the 400,000 in order to get the gross profit. And the value is 140,000. Of course, we will deduct the Operating expenses, we have our variable selling and administrative, just to separate one from the other. So how is it computed? The 20,000 units sold multiplied by the variable cost per unit, which is 2 pesos. It will give you a value of 40,000. Okay? And then the fixed component of the selling and administrative expense as given is 15,000. So there is a total of 55,000. And therefore, our net income under the absorption costing is 85,000. On the other hand, when we talk about, let's compute now for the net income under the variable costing. So this is an alternative approach in the computation of net income, but again, variable costing is not an acceptable method of reporting as long as GAAP is concerned. So variable costing is basically being used in management accounting. So of course, we start it with our sales, just like yung sa absorption. That's 20,000 multiplied by 20 pesos. So it will give you 400,000. And then, dahil variable costing to, we will deduct the variable cost of goods sold. How is that computed? Since cost of goods sold din naman yan, no? So, basically po, dyan din po papasok yung inventory natin on January 1, which is 0. The variable component of our cost of goods manufactured. So, how much is that? Based on the given kanina, the variable po is being computed, 30,000 units yung na-produce. But since variable lang yung kinoconsider natin, yung 9 pesos lang ito. Ito yung na-compute natin na production cost under the variable costing. So, it will give you 270,000. Okay? And, of course, the variable cost of goods available for sale, 270,000 also. Okay, and then we will deduct, of course, yung inventory natin on January 31. And that is 10,000 units multiplied by the unit cost of 9 pesos. That's 90,000. And it will give you 180,000. The 180,000 is the variable cost of goods sold. Okay? But, ibabawas pa rin natin dito yung variable component naman ng selling and admin. Okay? Kasi under the variable costing, ang pagsiseparate natin is not on whether it's part of the product cost and or as part of period cost. The way we separate or the way we compute variable costing net income, we identify first the variable expenses, whether it's product or period cost, and then saka natin kuhanin yung fix, no? Pero hindi natin pinagsama yung variable cost of goods sold tsaka yung variable selling expense, because at the end of the day, they are of the different nature. Although para silang variable, but one is product cost and the other one is period cost. Okay? So just to continue, yung nabenta natin, that's 20,000 units. You multiply it by the 2 pesos variable selling and administrative expenses per unit. So you have here 40,000. Okay? So pag pinagsama mo yan, yung dalawang yan, the variable component of production and the variable component of period cost, a total of 220,000 units are the 20,000 pesos rather, are the variable expenses. And so 400,000 sales minus 220,000 variable expenses or variable cost, the difference here is 180,000. 180,000 represents the contribution margin. Okay? And then, of course, we deduct the fixed component of the manufacturing overhead. So, that is given. Hindi na natin kailangang i-divide pa, just like what we did kanina doon sa computation ng nung dun sa isang video. Hindi na natin kailangan because under the variable costing, the fixed manufacturing overhead will be deducted in full at the time it is being incurred. It is not part of the inventoriable cost. And so, it will be the entire 120,000. And of course, the fixed component of the selling and admin expense of 15,000. So, the total fixed cost is 135,000. Okay, so therefore the difference here is 45,000. The 45,000 is the net income under variable costing. Okay? So, kung i-compare po natin, ito po yung net income na lumabas. Under the absorption costing, it is 85,000. Under the variable costing, it is 45,000. So there is a difference of 40,000. Okay? So bakit po or para saan po yung 40,000 na yan? Saan po natin pwedeng i-associate yung 40,000 na yan? Okay? Alin po yan? Yung 40,000 na difference ng absorption tsaka ng variable costing. So, the concept or the main difference ng dalawa is the treatment of the fixed manufacturing overhead. And in the previous video, the fixed manufacturing overhead per unit computed as yung 120,000 na fixed manufacturing overhead divided by the 30,000 units na na-produce, it is computed at 4 pesos per unit. Okay? So, the 40,000 here is actually the 4 pesos fixed manufacturing overhead per unit multiplied by the 10,000 units, which is the ending inventory. Okay? And also with this kind of illustration, we can say that if the production is greater than the sales, it means absorption costing net income is greater than variable costing net income. Production is 30,000, which is greater than the sales of 20,000. Net income under absorption costing is greater than the net income under variable costing. Again, the difference is associated with the presence of the fixed manufacturing overhead per unit of 4 pesos multiplied by the ending inventory of 10,000 units.